Hey everybody, how's it going? Recently, I did a video where I went over the entire summary of what happened last week regarding GameStop, Wall Street Bets, Robinhood, and everything else. And that is in a video you can see on my main channel here, Ultimate Wall Street Bets, GameStop, Robinhood Summary. I would highly suggest watching it. I have timestamps here with the most crucial points for those who don't want to listen to the entire thing all over again. Now, there's one particular part of that video that I went over, which is why is it that Robinhood was allowing sells but not buys? And there's a lot of confusion regarding that, and there's also a lot of distrust regarding the reasons given. So I wanted to read this article, and after I read this article, which I believe is correct, then I want to explain why there was the level of distrust that there was last week that's probably still causing this question to come up in the comments over and over and over, and also the level of distrust that caused me to not believe a word that he said when he initially said what he said. So let's go over this. It said why Robinhood disabled buys but not sells. There's been enough time for the dust to settle and for Robinhood's actual reason for halting trades to come out. But the question of why only buys and not sells has not really been answered in detail, and that's mainly because it's a pain in the ass and delves deep into how the deposit requirements are calculated by the DTCC for brokers. First, what happened? On that fateful day, GameStop stock had massive volatility, and given the cries of buy and hold from Wall Street Bets, I'd assume on Robinhood, a broker targeted at retail investors, it'd be heavily imbalanced towards buy trades. As volatility increased, the DTCC, Depository Trust and Clearing Corporation, increased the deposit requirements for brokers. Basically, when you submit a trade on a broker, the exchange of money for stock doesn't actually happen until 2 days later. And the firm that handles that exchange is called the clearing firm. Before then, Robinhood just sends records. John bought 2 GameStop for $600, Mary sold 1 GameStop for $290. If that's all that happened that day, then Robinhood would need to provide $310 to the clearing firm and receive 1 stock. That's a credit risk. What if Robinhood doesn't have the money on settlement? The clearing firm would be on the hook. So the DTCC requires that brokers put up a deposit beforehand. On that day, the DTCC massively increased the deposit requirements for brokers. A spokesperson for the DTCC wouldn't specify how much it required from specific firms, but said that by the end of the day, industry-wide collateral requirements jumped to $33.5 billion, up from $26 billion. The amount required by clearinghouses to cover the settlement period of some securities rose tremendously this week. How much? To put it in perspective, this week alone, our clearinghouse mandated deposit requirements related to equities increased tenfold. Robinhood. So Robinhood legally could not submit trades on GameStop until they could muster the deposits for GameStop that they needed, and they quickly scrounged up the capital so they could continue on Friday. Robinhood's clearing firm. Robinhood actually has their own clearing firm, Robinhood Securities, for some reason, but it's still a DTCC member and must listen to what the SEC regulates. Update 1232 on margin. Some people seem to be mistaking the situation. It's not about margin accounts. While yes, Robinhood Instant Transfers provides the illusion of being instant effectively with margin, it's not really the issue here. Brokers cannot use client money to satisfy their clearing fund obligation. So whether or not the accounts had a settled balance didn't matter. As you can see from the other brokers which halted buys and did not have instant transfers. Again, this is about what's effectively collateral the brokers must put up so that all parties can mitigate the risk of a broker failing. Of course, client money is used when the transaction settles, but naturally you can't use their money, which isn't yours, as collateral. This is the part that's confusing a lot of people. A lot of people don't understand that they're actually not allowed to use your money. So a lot of people are saying, well, I bought a stock and I paid for it with my money. Why is the broker not using my money? That's not something that you are legally allowed to do. Now, there's one article that I linked to in my citations in that mega video, my summary video, where it says over here, now the broker cannot guarantee those trades with the client's cash, a la MF Global. Interesting company, the name there, MF Global, for a financial firm. Anyway, the broker needs to pledge their own capital. And if you take a look at what went on with MF Global, this was a giant clusterfuck bankruptcy, and the law is such to avoid this from screwing over the people who are the clients that the broker cannot use your money to make the purchase. They need to put up their own for collateral. So when the collateral requirement went up, they were not able to purchase stocks anymore. So this is why Robinhood was not allowing buys. And when you continue reading here, it gives you the deposit requirements And it says, remember when I subtracted John's buys of 600 with Mary's sell of 290 to get 310? That's the broker's net unsettled cash positions. The 99% VAR, basically. 99% of the time, the broker's net unsettled will not be higher than X. You might remember if you took statistics about confidence intervals, this is the upper 99% confidence interval. Bad, does some graphs, so let's model our risk curve for simplicity's sake. Here I've graphed a normal distribution with a line representing the 95th percentile. The y-axis is the probability and the x-axis is Robinhood's net unsettled positions. The more positive, the more money they'd owe theoretically. Now what happens if more people buy than sell? Then it would shift over to the right. Hasn't the 95% percentile moved rightward as well? Now, what happens if the market is super volatile? Wow, now it's even more to the right. As you can see, more buys makes this worse, sells makes it better. Robinhood cannot execute buys because it would increase the deposits they'd need, which they legally must obligate by. Sells, on the other hand, do not have this problem. They would not push the 95% boundary more to the right. The decision. So really, it's not a bad or a good decision that Robinhood halted buys of GameStop. It wasn't a decision, and it wasn't something they alone did. These brokers halted buys of GME. They put Robinhood, Webull, M1 Finance, Public, and E-Trade, while others only halted options, Interactive, TD Ameritrade, Schwab, and Trading 212. See a pattern. The former group includes companies like Robinhood, Webull, M1 Finance, while the latter has Ameritrade, Schwab, and Trading 212. And he gives the years. And it looks like young brokers with limited capital resources to me, because the ones that halted most trading were the ones with limited capital resources that were new. And he says, stay or switch. If there's something to fault Robinhood, it's that they're a young, janky broker, and also you might be getting screwed in the spread by Citadel. What by there, when they say screwed by the spread on Citadel, when you make an order and you just make a market order saying, I want to buy a stock for this amount of money, they're supposed to find you the best deal on the market. As you can see here, Citadel has paid a $22 million fine for misleading clients about pricing trades. Long story short, when you make an order in your app and say, I want to buy 10 shares of this stock at the best possible price, they were not always giving you the best possible price. The reasoning for it, this is a long-winded case that probably many people can explain better than me. That's the absolute utter TLDR. I'm not an expert who can explain this, but that's what he's talking about there. That's the reference he's making when he says getting screwed over on the spread by Citadel, because Citadel is handling things for Robinhood. That's actually a part of how they make their money, which is in its way kind of disgusting, because this is the type of thing that where you can take advantage of people, but only if they're really noob investors. So they're dealing with Robinhood because they're the type of noob investors that are not really going to be aware of this until the SEC steps in and says, hey, you've been screwing people. So Citadel is no angel here, even before anything that happened with GameStop. Like this case goes back to 2017. And that's a real reason to stay away from Robinhood. But for the love of God, do not swap to Webull or something if that's your concern. And don't do it because you're abhorred by Robinhood's class warfare or something, because that didn't happen. It was a mixture of SEC regulations and a cash-strapped startup, while cash-strap on big broker scales. Although if you want to get mad at hedge funds anyway, feel free. You should always be mad at hedge funds, but please pick a real reason. You have no lack of choice to pick from. Now, the question that keeps coming up as well is, wait a second. So if I'm able to sell, but I can't buy, then why is it other people can buy? Well, who's buying if I'm not allowed to buy? The people who are buying, if you're not allowed to buy, are people who are using brokers that are well capitalized and don't lie through their teeth on CNBC about their liquidity problems. So let's say that you are a Robinhood user and you were selling your GameStop shares, but you were not allowed to buy them. Who's buying them? Me, as an Ameritrade user, would have been able to purchase your GameStop shares from you because my broker was more properly capitalized than Robinhood. Or let's say Fidelity or some of the other brokers that are more established. They would have been able to allow me to purchase shares if I was using them, whereas you, technically, if they disabled your ability to buy and you were selling, you would have not been able to sell to another Robinhood user. So the premise of, wait, if they're not allowing buying, then how are they allowing selling when a sale requires a buyer? That does make sense if you put yourself inside the tent of being a Robinhood user and pretend that the entire market is Robinhood. But since the market is made up of other brokers that are better capitalized than Robinhood, that were able to put up the higher requirements to DTC than Robinhood was able to, you were able to sell your shares to buyers that were using better brokers. So if that's something that you're mad about, then at the end of the day, I think that what you're going to be doing is looking for a better broker. Now, let's focus on why it is that there was so much scrutiny on this last week and why so many believe that this was occurring for malicious reasons, including me when I nearly got to the point of wanting to flip over my desk. Now, he's explaining this as a problem of not having enough money to put up as collateral, right? So here's the issue. When the Robinhood CEO went on CNBC and spoke, they asked him, clear as day, do you have a liquidity issue? And here was his answer.
Based on volatility in the markets, and they can be substantial in the current environment where there's a lot of volatility and a lot of concentrated activity in these names that have been going viral on social media. So we're really in unprecedented times, and in order to protect the firm and protect our customers, we had to limit buying in these stocks. And to be absolutely clear, Go ahead.
But it sounds to me, though, that you're suggesting that there was a liquidity problem inside the firm. And my question about that then raises all sorts of new questions about whether there's a systemic issue underneath the system and underneath the company unto itself.
No, there was no liquidity problem.
He said no. So what does that mean? Now, from a perspective of being able to believe what I'm hearing, this is a lose-lose situation. What do I mean by that? If he's telling the truth on CNBC that he does not have a liquidity issue, then it seems like you're halting trading for a malicious reason. If he's lying on CNBC and he does have a liquidity issue, as this post explains, that would cause him to not be able to fulfill trades for his clients, then that means that he is not maliciously halting trades. The issue is simply that he's broke. Now, one way or the other, this is bullshit, because if the first part of his statement is true, then the second part will be false. If the first part of his statement is false, then the second part is now more believable. So when he went on CNBC and gave this statement, he gave a statement that essentially is a seesaw. There's no way that you could believe all of the statement. If you are not having liquidity issues, then it doesn't make sense that you halt trading unless there's something malicious going on. Or if you do have liquidity issues and that's why you're halting trading, which is a reasonable explanation, then why are you saying you don't have liquidity issues? The reason that that interview garnered so much distrust and so much explosion last week is because that interview is essentially the CEO being a seesaw. If you believe this, then you can't believe that. And if you believe that, you can't believe this. So one way or the other, that CEO would be lying. Either he's telling the truth on CNBC and he's maliciously halting trading, or he's not maliciously halting trading, but he's lying on CNBC. Now, what I went over in my video here is I tried to dig in to the specific weasel words that he used. He said that we don't have a liquidity issue because we were proactive. So what he's saying there is, imagine if my landlord were to come over to me and say, Louis, I need you to pay your rent. Your rent is due. Your rent is $2,000. And I said, well, I'd love to pay the rent, but yeah, I'm not able to right now due to my bank account. And he says, oh, so do you not have enough money in your bank account to pay rent? And I say, well, no, I don't have a problem in my bank account because I haven't paid my rent. See, I'm being proactive. And he goes, wait, so if you have money, then pay your rent. And I say, well, no, I have money, but the reason I have money is because I did not pay my rent. Oh, so you don't have enough money to pay your rent? No, I have money. So you see what he did on CNBC? He got on CNBC and talked in a circle, which is the worst possible thing you can do, because Robinhood provides their order flow to Citadel. Now, Citadel has Citadel Securities and Citadel Hedge Fund. Technically, these two are separate, but a lot of people are looking at it the same way that they were looking at, let's say, Rossman Repair Group, Inc. and Rossman Supply Group, Inc. about 10 years ago. Yes, technically, Rossman Supply Group sells screens and Rossman Repair Group does repairs, but they are separate companies, but they're both run by the same Louis Rossman. And what's good for Rossman Repair is good for Rossman Supply, and vice versa. So a lot of people were looking at this and saying, wait a second. So the only reason that would make sense for you to halt trading is that you don't have money. And you just went on national news and said you do not have a liquidity problem. And you have a relationship with the firm that's owned by someone that would benefit from you halting trading because that person just bailed out Melvin Capital, who was short GameStop. And now you kind of understand why a lot of people believe this, when in reality, it's just that the CEO of Robinhood, in my opinion, again, this is purely my opinion, not financial analysis. This is my opinion. The CEO of Robinhood is a fucking idiot. Now, there's another video online that I think is absolutely amazing at this. This is one of Erica's favorite people on YouTube. She probably watches this guy more than me, which is Derek Van Schaik, who does a video on the body language. She'll be sitting there and just randomly go out, body language, body language. She really loves this guy. But he does a good analysis of just how this gentleman was lying through his teeth throughout that entire interview. And I would highly suggest you watch this. I will include a link in the description down below. But the reason for the halting trading was indeed something to do with them not having enough capital. This is the explanation that makes the most sense. The explanation that makes the most sense is that he wasn't being malicious and evilly trying to benefit Citadel, although I'm not ruling that out, to be clear. I'm not ruling that out until there is a legitimate investigation into that, because that's just too weird for me. But that the most likely reason for everything occurring is that he didn't have enough money, but he was also stupid enough to get on CNBC and say that we have enough liquidity. Now, there are some theories out there that I've seen that just genuinely, I can't bring myself to understand where they're coming from. So one of them that has been making its rounds around the internet that I discussed with Destiny yesterday on a stream is this one that they received $1 billion from hedge funds for stopping purchases of GameStop and AME. Now, to be 100% clear, when they provide their order flow to someone who is paying for it, so Robinhood is getting paid by a firm that they're providing order flow to, and that firm is headed by someone who has an interest in a business that has an interest in GameStop tanking, and they stop trading. That is weird. I can understand why people would think that, especially after the Robinhood CEO went on the news and lied through his teeth. But I don't understand where this one comes from. So them getting $1 billion to stop purchases doesn't make sense to me, because they actually got $1 billion so that they could keep allowing it. They got that $1 billion in so that when they said on CNBC, we don't have a liquidity problem, it's more like, we don't have a liquidity problem because we're getting $1 billion tomorrow, but we have one now. They got that $1 billion to allow trading to continue at all. Without that $1 billion, Robinhood would have been screwed and not allowed to allow trading. So they didn't get bribed $1 billion to stop trading. They got that financing of $1 billion so that they could allow trading in their, in my opinion, poorly capitalized young brokerage firm. So I'm not really sure where this comes from. And I honestly, again, I watch Kyle's channel. I don't agree with everything that he says, but I enjoy getting the perspective that I do when I watch it. It gives me an alternative perspective. And I'm confident that if he looks into this, that he will be, that he would gain a greater understanding of what is going on. I'm not going to be as harsh as Destiny was there, but this is something where, like, I'm trying to compute in my head how someone could come to this particular specific hypothesis of what was going on, and I'm not able to compute how someone comes to this hypothesis. There's a lot of hypotheses out there, and there's a lot of conspiracies out there that some of them make sense, some of them some of them it's just I have no idea. Like, show me your work. Show me your work for how you got there, and I'm not seeing it with this. And if someone else does, let me know, but again, just this is really a case of just show your work, you know? Like, you remember when you were doing your math as a kid and the teacher had to tell if you were cheating? They would say, if you weren't able to show your work, they would just throw out your answer. And this is one of those where I'm really just kind of like, show me how you got to this, and I could in good faith understand. But this, I kind of don't understand. And above all, before we close out this video, there are some serious concerns that I think should be brought up here regarding these brokers as we are going forward. So, if Robinhood was willing to go on CNBC after they disallowed trading and lie about their liquidity issue, there is a serious question of, do you want to use them as a broker? Because here's the thing. If they went on CNBC and said, listen, we're a young company, we don't charge people for trades, we allow fractional shares, we do a lot of things other brokers don't. We're a new company. I don't have JP Morgan Chase money. I don't have that Rockefeller money. I have new money. So sometimes when collateral requirements go from 5 to 100%, I'm not going to be able to handle that. But we are not insolvent as a business. That would have been something I think people can respect. But the fact that they're going to be dishonest about when they're having money problems really does make me wonder if I would ever want to use them as a broker. And there have been people posting about this and about potential insolvency issues that I think are issues that do deserve to be brought up. So here is a post that says Robinhood appears to be on the verge of insolvency based on a few data points. To continue operating, it drew on a line of credit from 6 banks amounting to 500 and 600 million. They had to raise an emergency $1 billion from investors today. They stopped allowing users to buy GameStop and other meme stocks for a full day. They have severely limited or blocked 50 stocks, including lots of non-meme stocks. This is interesting. So they on this list, they limited buying of not just GameStop, but General Motors. Again, is that real or is that a typo? Since when is General Motors a meme stock? You have silver stocks, you have silver stocks on here. You have things that are not memes at all. I'm not aware of General Motors having a giant short squeeze or being a meme stock. They are not allowing people to exercise their options. Instead, they are automatically selling. There appears to be a bank run on Robinhood, someone said, as some people are fed up with the restrictions. And one of the biggest ones is that with digital currencies, you can literally lose everything. And it says on this page, cryptocurrency investments through Robinhood Crypto are not protected, and Robinhood Crypto is not a member of FINRA, so it might make sense to store it in your own wallet. With my cryptocurrencies, when I had them, I would never leave them on an exchange. I would never leave them on Coinbase. I would leave them in my own wallet so that if the exchange goes Mt. Gox, I'm not completely screwed. So that's about it for today. And as always, I hope you learned something. I hope this video was informative. If you have any questions, if you have any criticisms, if you have any comments, do leave them down below. Or you can check me out on LBRY or Odyssey. You can find that by just Googling Rossman Group with LBRY, and you should be able to find me. That's an alternative platform. There are no advertisements on that alternative platform, and it will also be there in case someone, somebody farts in the direction of an algorithm and my channel gets Eli'd. I really don't want my channel to get Eli'd. But if it does, I am preparing by having stuff over there. I have 1.4 million subscribers here, and I have 11,000 subscribers there. I am really trying to kind of balance that a little bit so I have an insurance policy in case this channel goes away. So that's it for today. And as always, I hope you learned something. I'll see you all in the next video. Bye now.